All right, good evening, guys. Ken of Tortoise Capital Nightly Strategy Podcast for June 13th, 2024. We'll start with the sniper trade of the day. This one is in DIA. Here's yesterday's close. Here's a gap down opening. It sells off in the opening 3 minutes. We get short. This is the standard risk box. So we are short. Check or hold?
Check.
Stay in it until the R10 reverses, and we take the exit at the skin of the dragon. That locks in this gain against that risk. It's about a 0.8 R. Check or hold? We get the PSAR flip right here. So I get long here. Same risk box. This size risk box is the same as that one. Makes a micro gain. So it doesn't fail and just kind of monkeys around sideways. The R10 reverses right here. When it comes through the dragon and crosses the Bollinger Band main, basically exit here for a scratch. Not much to see. And I treat that as a stop and reverse when it crosses the PSAR. There's going to be our risk box. Why? Well, we're crossing the PSAR. We've already crossed the Bollinger Band mean, and we're getting ready to cross the VWAP. And this entire period of time, it had an opportunity to fail, but it did not. So now our thought is it could come back here to the opening and to yesterday's close. That would be 2 legs up. That would not be surprising. That would be an ordinary move. It scratches. It breaks above the VWAP. We're out of the lunch hour now. This is lunch. So it just kind of chops around. It crosses the PSAR. The Bollinger Band mean has rolled up. It's crossed the VWAP. It's testing the previous peak of the RL10. So I speculate in. Same standard risk box. Check or hold? This moves directly in our favor. Near the end of the day, the R10 begins to roll over after a last-minute burst of buying, and we're very close to the end of the day, so we just cash that there on 1 unit of risk. That gives us about 2R. So if that's 2, and this one is a scratch, and that one's a scratch, and this one is minus 0.5, and this one is plus 1, that brings us in net of 2.5. Check or hold? All right, this one is EWW. So here's yesterday's close. This is a large gap up. Now, on such a large gap up, it would have been acceptable to put an R5 box on either one of those and then play this long from here. I waited for the OR3. Take your pick. This is the opening range 3. There's a breakout from the OR3. I just take that one. I have a standard risk box on it. Where could this move? We go from the low of the day and add plus range stat. And that's what the upper limit of a reasonable move today could be. Excuse me. So this is the plan here to get long. Check or hold. It reverses immediately. We'll take a -1 on that one. And that's a stop and reverse. So now I'm short and the same risk box. Now I'm short and my target would be the Bollinger Band mean and yesterday's close. And on 1 unit of risk, that's about a 3-to-1 reward to risk ratio. Check or hold. It moves almost directly to the target. Never goes negative. There's your 3R against this -1. So we're net 2. The R10 reverses here. So we take the skin of the dragon exit right here for a little over 2.5R. Call it 3. Now I'll take that as a stop and reverse as an SSC. Why is that? Well, because we have a harsh winter. The R10 reverses. And we're a risk box off the low. And there was a lot of buying pressure all the way up here. So that's not an irrational target. Here's the peak. From R10 to R10. Notice that the sell-off happens in 1/2 the time that the upward move takes, but it still is kind of symmetrical. This is 3-minute. EWW 3-minute. So this move took about about 45 minutes. Yeah, this one went from 10:20 to 11:40. That's about an hour and 20 minutes. You get leg one, leg two, tiny leg three, and then it failed right away. So there's the R10 rolling over. I hit the sell button here and I get filled here. So on 1 unit of risk, you get +3 going this way. So we had about plus 2.5 here and -1. So we're holding about plus 4.5 net. I take the short when it crosses the Bollinger Band main and the VWAP. I pick up that negative bias. We're heading into the lunch. And it gives us about an additional 1R. So that's about 5.5 R for the morning trade in EWW. Check or hold? Take a look at the traders. All right, this is Tim. He's trading Merck on 3-minute bars. He's going to bring in 1.9 on this one. He gets short here. And there's his managed stop. It sells off. It comes back here. It rolls over. He reshorts it. Takes this exit. It hits the VWAP. He gets short again. He covers it at the skin of the dragon. So he gets 3 favorable trades. He's marked up his rationale. He's got all his planning information here, and he nets 1.9. Good trade. Here's Tim trading on Tesla now, also on the 3 minutes. Here's a big gap up. He gets the OR3 entry, nets 0.3. That whole sequence rolls over. It crosses the VWAP. He gets short here with a standard risk box. Rides it all the way down to here for 5.9. Nets 6.2 on Tesla to go with the 1.9 previously. That's an 8R day. Nicely traded. Notice that he's using the Four Seasons of MACD down here to help him with his moves. His little trading team, the 3P4 traders, have put together this little trading frame of reference using Trading View, which they've done all the coding and whatnot for you. If you're interested, just get a hold of Tim. This is Brian Lancaster. He's trading the British pound against the US dollar on 5 minutes. He was late getting to work. If he'd showed up on time, he'd have gotten that one. Instead, he gets the continuation COTA 2, sells it at the PSAR flip for 0.3. He's still working at a 0.7 expectancy across 55 trades. So he's up around 38 R on 55 trades. He notes, yeah, it should have been a stop and reverse crossing the dragon. MACD rolled over. The second leg is similar to the first leg. And this one probably would have been about +3R. And then this one would have been about +3R. So he left a little bit on the table. He's trading that thing like clockwork, to be honest. George, ends up scratching on a couple trades here in the Dow, but gets paid nicely on Mexico, does not get the second position. You know, there's a 1, 2, 3 entry right here. There's an entry where it crosses the VWAP. There's an entry where it crosses the Bollinger Band mean. And this would have been a very orderly trade with an exit right about there. Nevertheless, it brings in 0.5 with a straightforward OR3 or OR10 kind of an entry. And I might have taken this exit at the skin of the dragon rather than here, especially after this bottoming tail, which reverses at exactly the same level it did previously. I think I would try the exit there. This is Joe trading SMCI. He had other things going on, so he didn't get the first leg. He didn't get the COTA 2, but he did get the short. Make that a red dot to show that you're short, and that you green dot when you cover here. And he pulls in 7.8 R on essentially this supported fall crossing. So that's what 8R looks like. Nice work. Hamad gets chopped up a little bit here in DIA, but stays with it and brings some of that back here. Has a nice day in EWW, and he got what was available. And I think there was more available in here with a quicker reentry on this trade in here. Kevin trades DIA on the 10 minutes in a very orderly manner and makes 1.5 R. This is the OR10. Here's the breakdown. He gets that trade and covers it here. The better exit was probably after the turn of the RL10, as he notes. It would have been a micro improvement, but he could have stayed longer in the trade. He gets the 1, 2, 3 entry here, standard risk, is able to hold it all the way through to here. And then finally, this is Satya. He's trading EWW on the 3 minutes. And whereas I got about 4.5, he brings home 8.3. He tried this one too, missed the short, nailed the reversal after the R10 reversal, crushes this one, crushes that one, and that's what 8.3R looks like. So nice work from all the traders today. You guys are hitting your stride. Looking at dashboard number 1, we're still in bullish normal, strongly overbought except on the 2-day, which is just slight and the plus side of neutral. Very favorable volatility. This supports strong moves in either direction. We've got some buy on dip opportunities here in the globals. That's Euro Asia. This is Asia less Japan. IEV is the Asian or the European 350 large caps. Looking at, whoops, let's look at the Dow, sorry. So some weakness in Disney and Devon Energy. The whole energy complex was weak. Real strength in NVIDIA continuing just to smash smash its way higher. A little, again, weakness in energy. There's ExxonMobil selling off a little bit. Plenty of auto framers to choose from. There's a 5DD in Boeing and Nucor Steel and Pfizer. And channeling leads to buy on dip opportunities on all of those signals. For those of you looking at the swing trades over longer term time frame. In the ETFs, you have some strength in agriculture, U.S. technology, and even treasuries made a little rebound today. And then weakness in energy, marijuana, lithium, Japan. Plenty of auto framers to choose from. Today was a relatively low range day, and that means you're going to see a lot of auto framers better than 2-to-1. This would be the framing data that you would use for mechanical entries and initial stops and a test of the 10-day high. These numbers here are how you end up computing these reward to risk ratios. That's covered in the foundations course and the advanced swing trading course. Daily squeezes. So what I like to see here are ones that have favorable swing reward to risk ratios and are tightly compressed on today's range. So IBM, Nike, ExxonMobil, Cisco, Microsoft for the win. And I like Intel creeping into play here. Using the TC2000 auto framer. Above the red line are all the ones that are better than 2-to-1 on the mechanical reward to risk ratio. You can see that the S&P is actually doing pretty good. It's only a 0.2. So that means it's very close to its 10-day high. Still being dominated by summer. Winter, there's a lot more of the globals in the winter of their discontent. You can say it that way. In terms of trading value, what we're looking for is a combination of large average range percentage and then consistency measured by the frog quality number. That gives you Tesla, Nucor, Goldman Sachs for sure. But this is the ranking of those 1 to 10. Marijuana is still good. Clean energy is still good. NVIDIA and Intel. So those are your reliable intraday traders. Now looking at the Z-score of the 3 regression line slopes, you've got the RL10 has moved nicely out of the river. The 90 has actually started to reverse, and the 30 is finding support and getting ready to go. And the market is still grinding higher. It's trying hard. This is a statistical anomaly to be that strong for that long without a 10% sell-off. This was about 8%. As we continue to march closer to elections, it's becoming a topic of real concern among the professionals. We're starting to stack up their bets on the short side and hedging, which could lead to a short squeeze before we get a volatility reversal to the downside. So I'm just trading it one day at a time, monitoring my stops carefully and taking very little overnight risk. All right, that's everything for today, guys. Good job to the traders. You really knocked it out of the park today. Well done. Take good care. We'll see you tomorrow.